Good old variance multiple choice questions. Gotta love them. And why do I love them? Because they're relatively simple, relatively straightforward, and free points in the exam so long as you memorize. So memorize. Lots of formulas here, but as long as you memorize each variance formula, you will receive lots of free points in the exam. So put up the work and you'll do well. First thing I'm going to do here, lots of information, especially for variances. I want to read the question first. What is the direct labor efficiency variance? Blah, blah, blah. That's it. That's all we care about. What you should do, direct labor efficiency variance. Definitely have these memorized. If you don't have it memorized, definitely do that. I would go through these questions and answer them yourself. It's just free points, right? Because watch this. Our standard layout for these formulas is something minus something times something. And usually, not usually, I mean every time, we're going to have standard minus actual. So standard, and what is it? In this case, it's quantity minus actual quantity times standard rate. Couple points here. Within the formula, you see it's quantity. Now, it's efficiency variance. How efficient do you use your materials? And sorry, in this case, it's labor. So how efficient do you use your labor? So that's why a standard quantity of hours minus actual quantity of hours times, and then what's essentially the driver for these hours? How do you get your dollar amount? You have a rate. So it's non-monetary amounts times a monetary amount. You need, for all these variances, to turn them into dollars somehow. So that's why you're going to usually invoke a rate. I'm trying to explain this and why we have what we do in the formula, but at the end of the day, how I did it for the exam, and I did really well in this, was I just straight up memorized them. Like if someone just said to me direct labor efficiency variance, without thinking, I would have spewed this out. Without even thinking about, it's standard minus actual, like what should be with efficiency, it should be labor. No, I just spit it out, right? So do the same. It's so worth it. It's so worth it. You will do so well in these. But now that we've got this written out, it's just plug and chug, right? Cherry picking pieces of information. Well, what's standard quantity of hours? Same as budgeted. Budgeted is the same as standard plenty of times. 1,600 hours. And then what's the actual quantity of hours? Well, 1,700 hours. Great. And then what's a good standard rate that we should use? Okay, I'm looking through. Well, it looks like standard or budgeted, $12 per hour to fill the order. Now, double check yourself. Does this make sense? Well, okay, we have standard minus actual hours. So this is going to tell us if it's favorable or unfavorable. You can immediately tell based on what's in the parentheses. We used more hours to do this project, to build these toasters, than what was budgeted. So in this case, I would say immediately it's going to be unfavorable. I'll cross out A and D. It's a great way to immediately eliminate. And then we just do the math. This is 100. The difference here is 100. It's negative 100. Yep. Times 12 is letter C, $1,200 unfavorable. 3 points in the exam, not too difficult. And definitely read the question first because there's a lot of information there that we did not use, we did not need. You could get a sim on these, right? Because they could give you a bunch of variances that you have to solve and they give you a lot of information. And the only way you'll be able to do those is if you have the formulas memorized. Next up, a company gathered the following information. What is the company's variable overhead spending variance? Write it out yourself, but I'm going to do the same here. All right, well, what is our formula here? So we are going to do variable overhead spending variance equals actual rate minus standard rate. And since we have dollar amounts in here, we're going to have a non-dollar amount thing out here times, in this case, this is going to be actual hours. We say actual amount. So in this case, actual rate, what's our actual rate? That seems to be actual variable overhead rate is $8. Keep in mind, that's $8. Standard rate seems to be $10. Actual hours seems to be 25. Boom, we can see right away, well, okay, $8 was the actual rate. So it looks like we actually made out well here because we paid a cheaper rate than what is standard. or budgeted. So this would be favorable. So it's going to be either B or D. And then here, $2 times 25 gives you $50 favorable, letter B. 3 points, nothing too crazy. 99% of your variance questions will be like this. There are like 2 variance formulas that are a little gross. And to those I say, probably not worth your time going through them. I'll just tell you straight up, probably not worth your time to practice those, because you'll much more likely be seeing WAC and CAPM and other relatively grounded and down-to-earth formulas. Here, what was the direct material usage variance? In this case, this is going to equal actual quantity minus standard quantity. And quantity of what? Well, this is direct material usage variance. So materials, actual materials, in this case, 25,000 pounds minus standard budgeted. And that seems to be, oh, okay. So this one actually, this is how they could trick you, is you don't have your budgeted amount, but we can figure a way to solve that. Okay, let's finish it out though. Times your rate per pound, which in this case is going to be your budgeted rate per the formula. And that's $5 per pound. Awesome. So we used our actual quantity minus standard quantity times actual rate. Times budgeted rate. Super tricky, right? I mean, as long as you memorize it, you will do just fine. Awesome. So now how do we find our budgeted or standard amount? Well, we do know that the information provided, 2 pounds per widget. So, okay, like what do we know on pounds? Budgeted pounds is 2 pounds per widget. And how many widgets? Well, 10,000 widgets right here. Actual usage was, we actually made 10,000 widgets. In this case, it's going to be a simple calculation there of $2 per widget times 20,000 widgets right there. Sorry, 2 pounds per widget, 5,000 in total. So it looks like actual usage was more than budgeted. And in that case, we're going to have unfavorable because we had to use more materials than we wanted to, more pounds than we wanted to. So it's going to be A or D. Get 5,000 here. 5,000 times 5 gets you 25,000, letter A. We're on a roll, right? Steamrolling down these. We've got a lot of questions, but they're good practice. Just see how doable these questions are. I love them. I think they're great questions. And why do I think they're great questions? Well, because they're quite doable, especially with a lot of the gross stuff you have in this test. Here, we have the material efficiency variance. Material efficiency variance, this is going to be actual amount, same standard, everything here, minus budgeted or standard times, where are we, times budgeted rate. Actual amount here. Actual amount of what? What are we trying to find? Well, this is going to be actual of our board feet, so 9,000. Budgeted is 85. And budgeted rate is $2. Nice and simple. We see here, it looks like we actually used more than we had budgeted. If that's the case, I'm going to say unfavorable, crossing off B and D. 500 feet here is the difference. 500 times 2 gives us 1,000, unfavorable, letter A. Awesome, awesome. Doing well. Hope you're following. And memorize, memorize, memorize. Which of the following types of variances would a purchasing manager most likely influence? Here, we're not going through our standard formulas. Let's talk about this a little bit more in thinking about these formulas overall, what they mean. Okay, so a purchasing manager. So this is someone purchasing goods for the factory. Right away, I'm going to cross off labor because we're not going to have any influence. We're the one determining what we purchase and how much we purchase and what we purchase it for. That has nothing to do with labor. Maybe a plant manager, a hiring manager, a overhead, a shift worker manager, they would be able to determine something with labor, but not a purchasing manager. Next, what would they likely have influence over? So this purchasing manager, also known as a purchasing director or supply manager, if you've worked in industry before, they had a team responsible for procuring goods and services for resale or company use. They look for the best quality for the lowest price. In terms of quantity versus price, You don't determine what quantity you need. The factory is going to tell you, hey, we need 10,000 units. So you're not, I mean, yes, you're telling the company we want to buy 10,000 units from you, but you're not determining, you're not influencing how much you need. Actually, the consumers determine how much is needed because the consumers will buy from you. You need to buy materials from a distributor, right? So in this case, it's going to be price. You don't set the prices from who you're buying from, but you have negotiating power and you do your best to buy for the cheapest price. Think about yourself in this exam. You're wearing the hat of a manager of a manufacturing plant, of a company. You're a CFO. You're in different roles, but at the end of the day, you're worried about profit. You're concerned about investors. You're concerned about doing well and keeping the business afloat. In this case, you're a purchasing manager. Think like a purchasing manager. And a purchasing manager, get familiar with that role. They have influence over price. Back to some good old variances. Thought you were done. No, we're not. We're rolling through. All right. So what is the company's direct labor efficiency variance? Let's take a look. Well, this formula is going to be actual hours minus standard hours times standard rate. And let's plug and chug. Actual hours seem to be last month the company produced and sold 100 units. It's not hours. Using 110 direct labor hours. Great. So we actually did 110 hours. Okay. Standard rate seems to be standard quantity, standard price, standard quantity is 1 hour per unit. Standard price is 15 per hour. So it looks like standard rate we're paying is 15 an hour. Now you might be wondering, where do we get those standard hours from? And good question. Well, last month the company produced and sold 100 units. Standard quantity of hours is 1 hour per unit. 1 times 100 gets you 100 standard hours. Like we saw in that question before, sometimes they won't directly give you that. Oh no, super scary, right? You got to calculate it yourself. Nothing to be too concerned about. And with this one, we're not really concerned about favorable or unfavorable, it seems, which that's fine. But this would be unfavorable because we actually needed 10 more hours than is standard or allowed for the project. Some questions may not ask for that. That is fine, right? So no worries. Difference here is 10. 10 times 15 gives you 150, letter B. Cool. Like I was saying, free points if you memorize the formulas. All right, 2 more questions for you. What should be reported as the material quantity usage variance? Good question. Well, this is going to be actual amount minus standard amount. Put that in parentheses and then times our rate. And what rate? It's going to be standard rate. We're dealing with materials, so standard price per pound, and we're dealing with pounds. Cool. Identify those right away. Standard rate seems to be $3, as mentioned above here. And then how many pounds? Okay, we purchased 10,000 pounds and used. Okay, we see purchase and used. Could be a little trick here, and I would definitely be mindful of that because it is a trick. We want used, right? What is quantity usage variance? In this case, we actually used 9,400. So we can populate that. Okay, but purchase, this is not relevant. We don't want this 10,000. What is the standard usage? Standard material usage per trivet is, what is a trivet? I don't know, man. I don't know what a trivet is, but they mentioned it over and over. No worries. It does not matter. If anyone knows, send me an email. I'm very curious. All right. So $2 material per, we are making 4,500. 4,500 times 2 gives us 9,000 pounds of standard. We see here actual used was more than standard, bringing us to an unfavorable conclusion, but they're all unfavorable. No worries. Okay, 400 is the difference here. 400 times 3 brings us to final answer of letter D, 1,200 unfavorable. Final question, let's wrap up here. What amount is the total direct labor price variance? Let's see. All right. Well, total direct labor price variance, this is going to be, in parentheses, actual rate minus standard rate times what? Times, in this case, it is going to be our actual hours. And let's see what we can immediately fill in. It'd be nice if we could immediately fill in everything. However, in this case, fortunately, it will not be the case. So standard per hour labor rate is 24. Fill that in. And actual rate, actual per hour labor rate is 23.5. Okay, we have those. What about actual hours? Is that given? Unfortunately, it is not. We're going to have to do a little digging ourselves. No worries. How do we get the actual hours? Okay, well, what do we have that's actual that we could go off of? Well, we have actual rate and we have actual direct labor cost. Oh, well, I mean, what's the actual cost divided by the actual rate? That should give us the actual hours, right? Because think about it. I mean, the total cost is derived from the total hours times the total rate. We're going to do 111,625 divided by our rate of 23.50. That's going to give us our total actual hours of 4,750. Actual hours here, 4,750. Well, is it favorable or unfavorable? I'm going to say it will be favorable because looks like our actual rate that we paid was cheaper than the standard or the budgeted rate. We get 50 cents here. 50 cents times 4,750 gets us to our final answer of letter C, $2,375 favorable. Looks like in this case we did well. Good for us as the company. Those were some wonderful questions. Thank you for joining and hope you had a good time with variance analysis. It is a fan favorite of mine. I hope it is with you as well. Practice, you'll do well, and I'll see you next time. Hey there! Are you ready to not only pass your CPA exams, but truly understand and enjoy the material while studying? I know it seems impossible, right? Especially to enjoy the material? We'll do it together. Tap into the power of CPA.examprep.ai, where we've got personalized quizzes, multiple choice questions, memorization guides, flashcards, simulations, all tailored to your learning. Our adaptive study planning puts you on the fastest path to success and lifts you back up if you fall behind. Avoid wasting your precious time and money attempting an exam with a low chance of passing, because who wants that? We want to get you through this process as quick as possible. Our exam readiness prediction lets you walk in with confidence, knowing that you're prepared for success on exam day. Thankfully, there's no payment method needed to get started, so why don't you come join us? Visit cpa.examprep.ai and let's achieve your exam success together.